Hi there, welcome to Kneppy Invest and welcome to another technical update video. So the agenda for today's video, fairly simple. I am going to, actually before I talk about the agenda for today's video, I just want to ask you a question. I will be featuring JB Hi-Fi in the company specific portion of this video. So I've got about 13 companies charts I want to show you, but I am thinking, just thinking at this point, I am thinking of doing a standalone video titled, Is JB Hi-Fi a Sell? The reason I want to discuss this particular company is because over the past 2 months, JB Hi-Fi has been featured heavily on AusBiz The Core, and every single analysis has called JB Hi-Fi a sell. One analysis actually stated, I don't want to look silly by calling this a sell, so I'll just call it a hold. So I want to discuss whether or not JB Hi-Fi is a sell right now. And I am a JB Hi-Fi shareholder, so this is a pertinent question for me. So I was thinking, instead of discussing this in a video like a technical update video or an answer reply video or an ASX daily rundown video, I thought maybe I'd do a standalone video on the topic, a fairly short video, maybe 6 minutes long. Is JB Hi-Fi a sell? And I'll go through the processes of personally me deciding whether JB Hi-Fi is a sell, because this is a question I am discussing with myself right now. So answer that in the comment section of this particular video. And more than likely, I probably will do it because I'm thinking about it. And usually when I think about a topic to do a video on, I usually do it. Anyway, so the agenda for today's video is almost identical to every other technical update video I have done. We'll look at indices, commodities, Bitcoin, Ethereum, bonds, and then we'll look at 13 individual companies' charts. And I'm looking at some of these charts right now, and an intriguing group of companies, I have to admit. Anyway, so let's get started straight into it, looking at the indices. We'll start with the XJO, and are we excited? The XJO, the XAO, which is the All Ords, are both at record highs because of the last 2 days of trading week. We've seen the XJO up almost 1%, not quite, but almost up 1%. And for the week, the XJO was up about 2%. I'm just going to verify that. Up 1.75% at record highs, just shy of 8,000. Now, the question becomes, will there be any resistance at 8,000? Because it's a round number, and for some reason, investors love or hate round numbers. Not sure what it is, whether they hate or round numbers. I think it depends. Did we see anything at 7,000? No, not much resistance at 7,000. So maybe at an indice level, round numbers don't matter as much as compared to individual companies. But it looks pretty good, the weekly chart. My only one reservation I have about the XJO is its relationship to, or where it is in relation to the trading channel. So this trading channel is portrayed by these 2 sloping orange lines. And this trading channel has been in place for 15 years. In fact, we'll say 15 and a half years. And every single time the XJO has got to the top of the trading channel, we've seen a little bit of weakness. The first time it got to the top of the trading channel, it hit it 3 times in a row, almost perfectly. Look at that, perfectly. 3 times in a row, it hit the top of the trading channel. And then the third time it hit the top, we didn't see the XJO get back up to those levels for another 2 years. In fact, it tried to get to that level in April 2011, but struggled and then fell back heavily to the bottom of the trading channel. And then we saw it get towards the top of the trading channel in 2015, towards the top of the trading channel just before COVID-19. And funny enough, one of the reasons I started to sell a lot of companies back then, this would be in early 2020, and I put all my money into my mortgage just because I wanted to become debt-free. And I thought the market was looking quite toppish. One of the reasons was because the XJO was at the top of the trading channel. And I thought we might see a pullback. And I thought we even might go into a recession. And we sort of had that sort of happen, but it was just because of COVID-19, not any other reason. And then, of course, during COVID-19, the XJO fell well below the bottom of the trading channel, but that's because of a black swan event. Something you can't really predict. And then it bounced quite violently to get back into the trading channel. And then between, I think it was like August, September 2020 and August, September 2021, the XJO was up 11 months in a row, and it went from the bottom of the trading channel to the top. And the only time the XJO has been above the top of the trading channel was in August 2021, and it only stayed briefly above the top for maybe a day or so. It touched the top of the trading channel again in January 2022, and then we saw weakness. And then it went all the way to almost the bottom of the trading channel in October 2022. So 2022, not a good year to be investing. And since then, the XJO has been creeping higher. And right now, we're nearer the top of the trading channel than the bottom. The top of the trading channel would be about 8,200. So we're still a little bit off, but not far off. So that's probably the only reservation I have about the XJO. And the XAO probably would be similar. So there's not much difference between the XJO and the XAO. I believe the XAO is about 8,200. Let me just have a look. For some reason, I just, personally, I just focus on the XJO. I don't know why, but the XAO, yeah, 8,200. So there's a small difference between them, but there's no big difference. In fact, if you just goggle between the two, ogle between the two, this is the XAO and this is the XJO. There's not much difference, slight difference, but not much difference. Now, compared to the XSO, which there is a big difference, this is small ordinaries. And not quite as bullish as the XJO. And in fact, we're nowhere near all-time highs. In fact, the XSO all-time high was back in 2007 or 8. Let me just verify. 2007. October 2007. And that was 4,100. We're still, well, the XSO is still well off those all-time highs. Even recently, the XSO is still well off the highs we saw back in May 2024 and April 2024. So not quite as bullish as the odds. However, the increasing chances that interest rates might drop because of low inflation in America, which I think, in my opinion, just could be a one-off. Because we also saw higher than expected interest rates or inflation in the UK, if I remember correctly. So remember when there was higher than expected inflation rates in Australia, some commentators said, well, this could be just a one-off. But the same commentators probably getting really excited about the lower than expected inflation in America. But again, that could be just a one-off. And one of the reasons why we had a really good week with small ords in Australia and also small caps in America is because of those inflation rates. So small ords was actually up 2.61% for the week, and you'll see the last 2 days were really good, up 1.28% and 1.49%. So small caps had a pretty good end to the week, but otherwise not getting overly excited about the small caps just yet. I do think we need to break to long-term highs, and that means getting above, 1,000 or 3,120. Okay, so that's all I want to talk about when it comes to the Australian markets. Now let's have a look at the American markets. Let's start with the Nasdaq, which, fun enough, had a down week. Yes, the Nasdaq had a down week. But who's complaining about that? Not me. Down 0.3%. So there was a little bit of rotation from the big tech companies to small caps. Yeah, rotation. People selling out of Tesla, maybe not Tesla, selling out of Nvidia, Microsoft, Apple, Alphabet, and moving into small caps. I do believe it's a little bit early, premature, call it what you will. It's been my problem in the past. I have been a little bit too early to the party, a little bit premature. And when the party starts really going, I get, I've already gone home by that stage. And that has been my problem. I need to be a little bit more patient. So I'm thinking a little bit too early right now. I want to be a little more patient when it comes to small caps. But when you look at the Nasdaq weekly chart here, who's complaining? We've had a stellar year, a stellar few years. The Nasdaq has doubled from the lows we saw back in October 2022. How can you complain about that? So just because we had a negative, or they had a negative week, not that serious. And it was really only one day. It was a Thursday session, down 2.24%. And if you look at the daily chart, yeah, nothing to complain about here. Dow Jones, a little bit weaker than the Nasdaq, but in the past week, it was up 2%, 1.6%. And funny enough, if you have a look at the daily chart here, I just noticed it. If you just draw a line at the recent highs, and they were almost double top, not quite. The highs we saw, the recent highs we saw were back in May, and we saw a bit of selling today or yesterday for the Dow Jones. It went to an all-time high, and then we saw a little bit of pullback. You might be able to see that if we look at a smaller time chart, so 5-minute chart. Yeah, we saw selling coming in at around about 3:45 a.m. local time. So in the last few hours of trading, there was a bit of sell-off in the Dow Jones. I wonder if there's a sell-off in the Nasdaq. Let's have a look. Yeah, there was a bit of a sell-off in the Nasdaq as well. I guess that's interesting in itself. That doesn't mean that Monday's session will be bad, but there was just a little bit of profit taking maybe towards the end of trading on Friday. Now let's have a look at the Russell 2000, which had an absolutely brilliant week. This is a small cap indice, the smallest 2,000 companies in the Russell 3000. So again, smallest 2,000 companies in the Russell 3000. Smallest is the most pertinent word there. Let's have a look at the Russell 3000, and this is daily chart. An absolutely stellar end to the week. Up 3.57% on Thursday, and up another 1.1% on the Friday. And just like the other two indices, there was a little bit of selling late in the day just based off this chart. But it looked like it has broken out on the Friday session because there's this dashed line here. So for some reason, I've got the dashed line. So let's have a look at the weekly chart. That dashed line, it could go back. Yeah, it definitely goes back further. Goes all the way back to 2021. The reason I put it all the way back there is if you look at the period between January 2021 and January 2022, whenever the Russell 2000 got to this line, this dashed line, there was a lot of buying. And I can say there's a lot of buying. This is the weekly chart because you can see these shadows below the main body. So whenever the Russell 2000 got to this level, there was buying. And then it fell through the level on 18th of January 2022 on strength, down 8% for that week. That would have been around the time we were fearing interest rates rises. And finally, it's got back up to that level, and possibly this is a breakout for the Russell 2000, just possibly. But it is, just based off the weekly chart, it is actually looking better. I'll be honest with you, it's looking better. Okay, so that's the American markets looking pretty good, just like the Australian markets. I have no trading channels, by the way. It's only the XJO I have a trading channel. But do you really need a trading channel for the Nasdaq? Look at it. This is the weekly chart. It's a brilliant weekly chart. Now, this is a linear chart. If you just, it's going exponential, which is exactly what you want to see for something to be invested in. You want to see over time it to be more exponential. That's exactly the way it works, or should work. Okay, let's have a look at the Nikkei. I believe we saw a little bit of selling in the Nikkei as well. Yeah. So this actually 1 week candlestick is a fairly bearish candlestick. Is it like a reverse hammer? Something hammer? Reverse hammer? Reverse hammer? Yeah, reverse hammer. Inverted hammer. There it is, inverted hammer. You can actually see it on this little image here. That looks fairly, doesn't it? Looks fairly similar than the Nikkei, doesn't it? And I'm pretty sure the inverted hammer is a fairly is a bearish signal. Meaning, let's have a look. Inverted hammer meaning. The inverted hammer candlestick is a candlestick that appears on chart when there is pressure from buyers to push an asset's price up. It often appears at the bottom of it. No, that's not the one. Oh, okay. So it says it often appears at the bottom of a downtrend. Well, we're not seeing that here. Indicates a bullish reversal or short-term downtrend reversal. That's the complete opposite than what we're looking for here. There might be another pattern. Anyway, you can just tell I'm not an expert in these sort of patterns. I just thought that would be inverted hammer bearish. I'm going to put bearish here. I don't know. It just looks like it would be bearish. Can inverted hammer be bearish? And this one says inverted hammer candlestick patterns are bearish, reversal patterns that indicate selling pressure. That's what I would think. Anyway, let's get back to the chart. So this is like at the top of the trend, maybe. That's what I was thinking. Maybe there's another term for this pattern when it's at the top of a trend, not the bottom. So let's have a look at a few other indices. So that's Nikkei. It's still looking pretty good, apart from that 1 week candlestick. In fact, let's have a look at the daily chart because that's a weekly. Did we see this? It was on the last day. Why was Japan down 2.545% on Friday? That's interesting. Was there news flow in Japan? Let's have a look. Balance of trade on the 18th of July. Oh, no, that's forecast. Japan's Nikkei drops from record peak on chip sell-off. Yen intervention risks. There we go. Let's go back to, not back, let's have a look at some other international indices, starting with the DAX. DAX looks pretty good. No complaints with the DAX. The FTSE 100 looks okay. No complaints then. The Hang Seng 100 looks weak. And I think that's probably it when it comes to overseas exchanges. So let's get to commodities, and we'll start off with our favorite, maybe not our favorite, but gold. Gold, and this is the weekly for gold. Who's complaining about gold? Anyone complaining about gold? I'm not. I just went through a lot of individual gold companies' charts, and quite a few gold stocks, we'll call it, on the ASX are looking really good right now. A lot of them are. Some aren't looking as good, but a lot are looking really good. Now, my one little reservation is gold is right at the top of this trading channel, which is a sort of a consolidation period for gold. It only goes back to April. The last two times we have seen gold get to this level at 2,420, we've seen it pull back. So this is a breakout level, just like gold at 2080 was a breakout level, and it broke through that on strength in March. So, and you can see that was a significant breakout, and it rallied really hard after that. I don't think this would be as significant, and it wouldn't be surprising to see it struggle to get above this level. And it actually did struggle on Friday's session. So gold still looks pretty good, okay at this point. I wouldn't be rushing into bulk, buy any more gold companies right now just because where gold is. But if it breaks out, could be a good time to buy some more gold. Let's have a look at iron ore. I can't say anything positive about iron ore. Probably the only company that looks positive right now in iron ore is Phoenix. And as someone said, Phoenix is more than an iron ore producer right now. So you look at this chart and go, doesn't look that interesting. But if you have a look at Phoenix, I am kicking myself here because I had been trading Phoenix, and then, yeah, this chart looks spectacular, doesn't it? There are reasons behind that. If you look at another iron ore company like, say, Mount Gibson. In fact, I rotated out of Phoenix into Mount Gibson, and then I started Mount Gibson because iron ore prices were looking more bearish, and that was actually a good call because Mount Gibson chart looks pretty blah. What about Fortescue? Fortescue's looking pretty blah as well. And yeah, so FedEx is the place to be when it comes to iron ore. Who would have believed that? The uranium at 85.95, nothing much doing with uranium. Really, if it breaks below this level at 83, or just above 83, that will be quite bearish. But it's come off well from the peaks, which were reached in February. So that was 5 months ago, which, and yeah, uranium was above $100. Now it's about 85 and just going sideways at this point in time. Oil, trendless. It's been trendless forever. I have no sentiment when it comes to oil. It could go down, it could go up from here. I'd say on the probability scale, more than likely it will go probably up. But I have no confidence in that. Just like I have very little confidence buying any oil companies, Karoon, Santos, any of those big ones. What's the other one? Woodside. I have no confidence about those companies. I'm more akin or likely to buy smaller oil plays that are looking really cheap. Brookside, is it Brookside? BRK? That's looking incredibly cheap, but there is a lot of negative sentiment when it comes to this company. And the share price is 1.2 cents. And I hate companies whose share price gets below 1 cent. But I believe if this company share price gets below 1 cent, it'd be absolutely ridiculously cheap. Lithium, let's have a look at the line chart for lithium. The line chart, please. Line chart. Just got to decrease the size of my head. And there's nothing with lithium. No reason to get excited about lithium just yet. Is that true likewise for copper? Let's go back to candlesticks because I just like candlesticks. Copper, nice pullback, beautiful pullback. started to rip higher, and then we've just seen a little pullback. So nothing to be concerned about copper just yet. And I do have one copper play, that's Hillgrove Resources. And the reason I bought shares in that company is they've just gone in production. And I do think it's cheap, potentially cheap. Coal, nothing much happening there. That's Newcastle Coal. Maybe there's more happening in other coal markets, but Newcastle Coal Futures, flat, going sideways. Potential breakout soonish, maybe sometime, I don't know. But it's going flat. It's going sideways now, consolidating. A few other, let's have a look at silver. Silver looks okay. Actually, it looks more than okay. If you look at the longer term, since March, it looks pretty nice. We've seen a couple of pullbacks, and those pullbacks have been natural. In fact, the last pullback was a beautiful pullback to a support level. Look at that support level. That support level became, that resistance level became support on this breakout on the 15th of May. What else? So nickel. Nickel's been really crappy lately, hasn't it? If you look at the line chart for nickel, look at that collapse. So there are a few nickel companies, Nickel Industries. What's the other one? There's the Brazilian explorer. What's that called again? It's called something. Centaurus Metals. And there's probably a few other nickel players that I can't remember, but it looked pretty good, and now it looks pretty ugly for nickel. What else? Natural gas. What about natural gas? Someone always tells me, don't forget, Woodside is also a really big gas player. Is it a bigger gas than petrol or oil? I don't know. Anyway, natural gas looks meh. I'd say meh. And then we'll also have a look at Palladium for our South African friend, and Palladium looks meh. There's a few things popping up on Michigan consumer sentiment. Lower than expected. PPI month on month was actually greater than expected. That was 12th of July. Okay. And finally, tin. If I can get to it, we'll go cocoa. It doesn't want to go down. Cocoa, and then tin. Tin actually looks pretty good. I don't mind tin. And what's tin? Metals X, I believe. All right, so that's commodities. Now let's have a look at Bitcoin and Ethereum. There was a lot of pressure on Bitcoin a few weeks ago. Let's have a look at the weekly chart for Bitcoin. What was it last week? Yeah, Bitcoin was down 10.9%. We've seen a bit of a rebound this week, up 6%. Still trading because it trades every day. Maybe the only reason to like Bitcoin is it trades every day. Now, what is interesting is last week on Thursday, the 4th of July, Bitcoin broke down below this support level. Now, you probably could say it's a zone, sort of in that zone, and it did break down below that, and now it's just risen above that. So this could have been a false breakdown, but it does look as positive Bitcoin as it has in the past. So there is a potential that Bitcoin is moving into a downward trend just by looking at this chart, but I'll probably need confirmation around that. And I'd say probably the same is true for Ethereum, although I'm just going to move this here. Ethereum has a really good support level at there. We call it a zone. In fact, I'm going to do a rectangle here because it's more like a zone. So let's do a rectangle. I always consider support to be zones, like it's an area. I never can do the rectangles right. So that sort of zone, when Ethereum has dropped into this zone, we've seen a little bit of support, and that was originally a bit of a resistance level because we saw Ethereum get to this level back in January, then pull back, and then it pulled through on a little bit of strength, but not a lot. But anyway, so that's the support level for Ethereum. The last thing I want to check before we get to the stock-specific charts is bonds. So let's have a look at a 30-year bond. This is the daily chart. So there was a bit of an uptrend in the US 30-year bonds, and that was broken back in June, early June. And after that, bonds have been going sideways. No real trend in bonds. In fact, it was down for the week. In fact, 2 down weeks in a row. So down 1.75% and down another 1.81%. I'm not reading too much in this, so I want to see a bit of a trend before I get too excited that interest rates are going to fall. And I think when a bigger probably indicator that interest rates will fall, or the chances of interest rates falling will be greater or are greater when you see the bond yield starting to really decrease or move into a downtrend. Okay, so that's it when it comes to indices, commodities, bonds, and cryptocurrency. So let's have a look at individual companies' charts. So I'll touch upon JB Hi-Fi because it is the first company. And the main reason I included this company is because, again, over the past 2 months, so many analysis on Oz Musical has called this company a sell. I would say probably 6 or 7 sell, 1 hold. Yeah, 6 sells, 1 hold, something like that. But the share price of JB Hi-Fi on Friday got to an all-time high. Actually, it got to an all-time high on Thursday and then got very close to the all-time high on the Friday. So they've been calling it a sell sort of in this period. In fact, even when the share price got down to $56, people were calling it a sell. So this is a problem with a company. With when you call a high-quality company a sell, there is a possibility the share price could keep on going up. And a lot of the reasons why they've called it a sell is because of a slowdown in this sector, obvious cost of living pressures, and also because they believe JB Hi-Fi is expensive. Now, I'll touch upon this more when I do that standalone video. And this is the idea I'm grappling with. The chart looks pretty good, but JB Hi-Fi could be considered expensive at these levels. So I'll talk about more on that topic when I do that standalone video. So at this point in time, the chart looks pretty good, but is now a time to take profits. Funny enough, if you look at the weekly chart for JB Hi-Fi, it hasn't been a sell for 11 years. So it became a buy in July 2013, and we have not had a sell signal since then. In fact, whenever the share price gets below this long-term moving average channel, this bottom green thing, because that means it's been a buy ever since then. Whenever it gets below that, it's been a buy. And that's exactly what I did in September, was it September 2022? Yep, September 2022. It got below this level. I bought some shares at $40 right here. And you can see that whenever it gets below that level, so you could say that's the 200-week moving average. So whenever it gets below the 200-week moving average, it becomes a buy because it doesn't stay below that level for very long. So it's been a buy, October 2014. For brief periods after that, definitely in January 2019, during COVID-19 financial panic, and then during 2022, it was a buy for periods during that year as well. All right, so that's all I'm going to talk about when it comes to JB Hi-Fi. It's at a record high. In fact, in the past week, it's up 6.1%. So more of a sell by those analysis, and probably they're kicking themselves, except for that one guy who said, well, I don't want to look stupid by saying it's a sell, so I'm going to call it a hold. He actually said that. I don't want to look silly. Nanosonics. So this is another company I do own, and this is a company I've been grappling with whether it is a high-quality company. It has the makings of a high-quality company in the future, but I really can't say that in regards to its performance over the past few years. There was a big sell-off back in January, and when they released their results in February, but there has not been a sell-off since then. In fact, their share price on Friday got to at least a 3-month high. In fact, the last time share price was that high was back in February, so a 5-month high when it comes to Nanosonics. If you have a look at the 1-hourly chart, some people do look at the 1-hourly chart. The 1-hourly chart looks pretty good. In fact, I'd say this is a bit of a buy, a sneaky buy on the 1-hourly chart. A lot of volatility in the air. Now, sometimes I will look at 1-hourly charts, but for this company, it's mostly the hourly chart, weekly chart, stuff like that, because it's a high quality, potentially high quality company. But I have not even thought about selling my shares in this company because it has that potential. And when a company has a potential, I don't want to sell prematurely because that could be a mistake. It has potential to run hard if they do prove what they're trying to do. Okay. PeopleIn is interesting. So this is a company I have traded. I traded this back. I took a trade in this back in December. It was just a short-term trade. I was expecting a bounce off $1. It happened. You can see massive volume coming in. That was a telltale sign there was going to be a bounce. Share price then broke below $1 in April and headed all the way down to a low of 70 cents in June but we have seen the share price rally, and the share price right now for PeopleIn is right on $1, right on $1. That's an interesting level for PeopleIn. The other thing to note, and this is really important, we have seen a subtle increase in volume since June when the share price got to its low. That can be a good sign. We saw very little volume, relatively speaking, April, May, as the share price was dropping. So this subtle increase in volume was another sign that someone out there was taking a position in this company, or a few people, few institutions were taking a position, and that's one of the reasons why we have seen the share price run up. Now, $1 is an interesting level. It was support, now it's resistance. So how PeopleIn share price reacts from here, I think it's going to be intriguing. So definitely one to follow. Did I put this company into my... I didn't. I'm going to put this company into my Buy Australia watch list. This is just me not saying it's a buy, but I want to pay close attention to this company for a potential buy as a trade. Austco, I think I put this company into this watch list because I thought this could be a breakout. Now, we saw a similar setup back in February. Share price rallied in one day, up 10%, and then pulled back into the trading range. Share price sort of trading in the range for about a year. And then we saw the share price pop up 12.8% on the 11th of July, which was a Thursday. And I thought this could be a breakout. We saw a little bit of selling during the day. And then on Friday, the share price pulled back a little bit, back to 21.5 cents, just like we saw back in February. The one big difference is the volume on Thursday was pretty high. The highest volume we've seen for a while. But then the volume really dried up on the Thursday. So this on the Friday. So this was sort of a one-day excitement machine. Now, they did a trading update, and the trading update was pretty good. So I'm not sure why there's been selling in this company. But this is one. I don't think I put this company on in my watch list. No. So this is another company I want to put in my watch list. So I want to see how the share price reacts. This could be a breakout. Whole reason I go through my processes is looking for companies that are potentially breaking out. And this is one that is potentially breaking out. And if we see further really good volume days, that could be another good sign. Cettire. Now, the reason I've included Cettire is because I mentioned Cettire in my ASX Daily Rundown video because the share price was something like $1.70 when I mentioned it. So this was maybe an hour and a half before trading had finished. And then when I was going through my end of week processes, looking at the charts, I just noticed this was a really bearish one-day candlestick. Share price actually closed at $1.42, virtually flat for the day. And I was like, what? What happened? So the share price of this company must have sold off in the last hour and a half. And if you look at the 5-minute chart, yeah, it did. In fact, if you look at the minute chart, I want to see if look at that. So just massive sell-off in the last hour of trading. It fell. So I probably would have mentioned Cettire somewhere around about 220, something here. So it started to sell off then, because it was about $1.70 if I remember correctly. And it went from $1.70 down to $1.40. In fact, it fell below $1.40 in the last hour. So in the closing auction, there was a little bit of buying because it closed just above that. A really big volume coming in the last 10 minutes. That could be a positive sign. It could be negative. I'm not sure just yet. So I'm going to pay close attention to Cettire. I have no inclinations from even trading Cettire, but I just want to, I'm curious. Curiosity got the better of me. I'm just curious to see how this company goes on Monday. I could see it going higher, could see this being a trigger for the share price to be sold off even further on Monday's session. Oh, a company called MSC Services. I'm going to have to give myself a bit of a credit or kudos here. I actually was a shareholder of this company for a while. I don't know why, because it was a really low quality company. So this is a company that it was a backdoor listing, maybe 2017. And I still remember the backdoor listing because they mentioned security when they announced the backdoor listing. And I initially got excited. I went, oh, cybersecurity. Wow, this could be a game changer for the company. And then I read further and I went, oh, no, this is physical security. This is security guards. And I went, ew. So I initially went, ew, there's going to be no margins in that company. And you might have heard me say I don't like labor-intensive companies. So we're talking about accounting, lawyers, and security guards, because There's not much scale. You can't say to a security guard, can you double the amount of work you do in a day just so we get a bit of scale? Or you can't say to an accountant, can you do double the work today so we get a bit of scale? No, to increase the work, you have to hire more staff, and staff cost money. So I was thinking, sort of poo-pooing this company, saying, yeah. I eventually took a position in this company because I thought, even though I don't like the business model, don't like what they do, it's cheap, dirt cheap. And they also, at one point, were giving a dividend. And you can actually see this company, the market actually liked this company for a while. So back between 2020 and 2022, share price ran up all the way to about 7.7 cents. And I was a holder during that period, and I was getting a dividend, and I was like, oh, this is pretty good. But the more I looked at this company, and the more I looked at their financials, like, this company revenue is growing, but they could not find any scale. So let's have a look. I'm going to show you this. A really good example of this is a company that's no longer on the ASX. It's a cleaning company. I forget what they were called. Massive amount of revenue, like $300, $400 million revenue, virtually profitless. Again, labor-intensive company. And you'll be able to see if it was on the ASX anymore. What was it called? It started with M. I think it was called. Anyway, MSG. I think I have to put the ticker code in. Now, the revenue of this company is much lower. And of course, it's going to take ages for FinChat to open up. So this company has a market cap now of $396,000. I have a feeling they sold out of their security business and now are just a traffic monitoring business, which again is labor intensive. Okay, so they just have to change it. They have to do a backdoor listing. So let's have a look at the income statement. So revenue was climbing up to $40 million, but look at the margins. Let's have a look at their margins. Where's the margins? So even the gross profit margin was 18%, operating margin of, at the height, about 5%. That was the height of their operating margin. And if you go to maybe the income statement and have a look at, I was hoping they had, where is it? I wanted employment expenses, but they don't have employment expenses here. It's probably in cost of goods sold, which we won't see. Anyway, so their employment expenses were pretty high. And so I just eventually just sold this company. I was like, it's not the sort of company I really want to own, even though it's always looked cheap. And then I think I sold when the share price started to move in a downtrend. I went, yeah, I just can't see any scale for this company at all. And the share price moved into a downtrend on the 22nd of April 2022, and the share price of roughly 5 cents. And I think I sold at about 4 cents. So I still sold out at a profit because I bought about 2 cents, if I remember correctly. Yeah, I would have bought about 2 cents. And then I sold at 4 cents, which wasn't double. So happy. And then look at the chart since then. Since about February 2023, share price has dropped from 40 cents to 0.1 cent. Yes, 0.1 cent. And this is the first time I looked at this company for a while. And it's a horror story. So 0.1 cent. So yeah, nothing. There's no reason. I believe they did sell out that business. Let's have a look. Settlement at sale of MCS Security. So they have a traffic. I believe they still have a traffic monitoring system or something. Not system. Job. Okay, yeah, continues to hold 100% interest in highways traffic, a traffic management company in Perth. So they were talking about, for the longest time, they were talking about expanding their services throughout Australia. They were primarily in Western Australia, expanding their services. But again, no matter how much you expand, you still have no scale, very little profit. It's not the sort of business you want to own, security guards. Anyway, so that's that. MCSG. Airtasker. Let's have a look at Airtasker. Why did I want to include Airtasker? Look at that chart. Something's happening with this company. Share price has really taken off the last few weeks. Not the sort of company I really like, but you can't deny when the share price rises 25.8% in 1 week after rising 11.5%. I'm wondering if this is just a little bit of excitement. trading as well. Have they released anything? Nothing, except the ARN media partnership on the 4th of July, media partnership on the 26th of June. So was there any interest on the 4th of July? Let's have a look. Share price rose a little bit, but I think this is just trading. Particularly through the daily chart. Share price went on a really good rally. In fact, that rally we saw back in January looks fairly similar to this one, doesn't it? Some big volume coming in on the breakout on the 11th of January. That was the highest volume. Share price rose on the day 9.52%. And then the following 2 weeks, share price went from about 22 cents up to 32 cents. And then the share price pulled back, volume dried up, volume starting to expand again, share price expanding. I would be surprised if we don't see the share price pull back after this, because we haven't seen any justification, any catalyst behind this rise. But I'm always paying attention to this sort of chart, because there could be something behind it. Infratil. I actually don't mind this company for as a value play, as a quality play. I could imagine myself buying shares in this company and holding shares in this company for the longest time. An infrastructure company, also data centers. And in fact, if you look at the weekly chart, there has been an explosion in volume the last 4 or 5 weeks. Highly liquid, if you go all the way back to 2015, the share price was like 250. The share price has quadrupled since then. And just looking at this weekly chart, this is a telltale sign of a high quality company. Telltale sign. So I am actually following the company's shares chart, and I'm just waiting for a little bit of pullback. And we started to see a pullback. Share price fell 2% on Friday, and I'm thinking, is now the time to take a position in this company? I am asking myself that question a lot right now. Is it time? Infratil. I'm going to write it down. Infratil, time to buy. And I'll put this into my quality portfolio. Okay, a few companies I don't know anything about. First one is called Imricor Medical, and we had a breakout. Well, sort of not a breakout, a crossover between the 50 and 200-day moving average in the past week, and I suppose the chart looks okay in the short term. And the other thing to note is the volume has expanded as well, so that's a good sign. So I don't know anything about this company. I just saw this chart. I went, this chart is actually looking interesting. Now you probably say there is a bit of resistance sort of there. You could probably put a zone there. Let's do that right now. There's probably a little bit of resistance in this zone right there. Maybe even higher than that, but definitely a bit of resistance, because we have seen the share price struggle to get above that zone since September of last year. So it's in that zone right now. So Imricor Medical Systems, well, I can see what they do, sort of what they do, medical systems. So medical technology company. Do they have any profits? No, in fact, very little revenue. Let's see what they do. Medical device company which engages in design, manufacture, and distribution of magnetic resonance imaging, MRIs, compatible products for cardiac catheter ablation procedures. That's a mouthful, but the chart looks interesting. Now that's a daily chart. Let's have a look at the weekly chart as well. Share price as high as 275 back in 2020. So this is a recent listing, not that recent, 5 years ago. Funny enough, it's in my IPO. It's in my IPO watch list, which means I put this in my watch list many, many years ago, and I just haven't had a look at it since. So that's how I take companies off my IPO watch list. I have a look, a deeper dive into the company. And I've never done that with Imricor. Another company I don't know much about is called Bcal Diagnostics. Another recent listing. So this would be in my IPO again. I don't know anything about what this company does. Share price was in a horrible downtrend for the first 2 years it was listed. Or year? Yeah, about a year. Oh, that's a weekly chart. But something is happening with this company recently. We started to see volume increase since about May, and that coincides with the share price breaking out. Yeah, so interesting. But again, I'd say there's probably a little bit of resistance sort of in this zone. That zone. It's a very rough zone, but definitely it's in a resistance zone right now. Bcal Diagnostics, so medical health company. a medical company. Do I have to say medical health? Medical company that deals with diagnostics. Again, no revenue. Developed screening tests for early detection of breast cancer. And we all hope this company succeeds. If you don't want this company to succeed, you are a horrible person. Because we want breast cancer to be eliminated. We want all cancer to be eliminated. Now, onto Catalyst Metals. This company released their production results during the week, and they were pretty good, and the market loved it as well. I'm not sure if I would buy at these levels because a really good week after they released their results. In fact, the weekly chart, the weekly increase in share price up 37.7%. But definitely, if you look at the weekly chart, we are seeing a turnaround in sentiment, and look at the volume. You can see the volume expanding significantly in the past few months. If you look at the daily chart, you probably see that as well. Well, there's one day, really big volume on the one day, 18th of April. But if you look at the last 3 days, a nice expansion in volume. So definitely a nice turnaround story here for Catalyst Metals. Brickworks has just popped up on my crossover, 200 to 500 crossover. It showed up on that particular screen not that long ago, but it was a negative crossover. Now it's gone over again, and share price up to 27.50. I would imagine many shareholders hold this company for the long term. So is this a time opportunity to buy this company for the long term? So if you look at the weekly chart here, there was a buy signal back in February 2013. It's very similar to JB Hi-Fi. There's been not a sell signal since. So there's a buy signal, not a sell signal since. In fact, again, just like JB Hi-Fi, when the share price falls below the 200-week moving average, that's a time to buy. But the share price of Brickworks is actually well above that level. That level, 200-week moving average, is about $23.50, which probably suggests this company is not necessarily cheap right now. But if you do look at the weekly or the daily chart, possible signs of the share price trying to move into an uptrend. Try. Now onto a company. I'm looking at the tick code right now. This is the final company, I believe. Yep. Final company. And its tick code is QGL. And it's showing up now, Quantum Graphite Limited. I have never heard of this company before. So obviously, share price up 14.85% on Friday. Obviously, this showed up on one of my screeners. And, you can tell why. It showed up to my screeners. 3-month high and volume. I do have an unusual volume. Look at the 3-day volume. Massive volume coming in. In fact, the volume before Friday's session, when the share price was up 15%, there was really big volume coming in. The share price did nothing. Share price was up 1% on one day, 3% the next day, and then the real big volume came the next day. So this is an instance where the volume precedes price action. I have heard that a little bit. Is this a breakout? It's very close to a breakout. I don't know if this company released anything. Let's have a look if this company released something. Quantum Graphite, obviously something to do with graphite. Did they release anything? No. They did a price placement on the 5th of July. Nothing. What if this company will get a price query or a price and volume query from the ASX? I'm not sure. It might. Okay, so that's all I have for this part of the video. I've got one thing. I completely forgot to talk about this. I wanted to talk about this, and that is so far the performance of my 3 portfolios, including a new technical strategy. I mentioned this on one of my ASX Daily Rundown videos, I think. So what I've done with my portfolios now, so I have 4 portfolios in ShareSite. If I have any more portfolios, I think I have to increase my subscriber cost or something. So I have the group portfolio going back. I have my quality portfolio, so we can see how it's done in this financial year, 2 weeks old, but significantly outperforming. I think I have to show open and close positions. Significantly outperforming the NDQ, the benchmark, which is the Nasdaq 100. That is down, but my quality portfolio up 2%. I'm not going to complain about that at all. Show percentage changes. So I'm not going to complain about that. Beating the Nasdaq. and also have my technical portfolio. So what I've done with my small caps, I've either sent some of those companies or put some of those companies into my quality portfolio. Johns Lyng Group, Ordinate, Aussie Broadband maybe, a few other companies I believe, RPM Global also. And some of the companies I have put into my technical portfolio, smaller companies. For instance, let's have a look. What companies have I put? SciDev, it's definitely one. I think EZZ Life Sciences is another one. Visan is another one. MSC Services is another one. That's one where I don't really consider that high quality. So it's more of a trading stock, but yeah. A few others here. Bell Financial is another one. Anyway, so that's, and there's IPD Group as well. Anyway, you can see CSL's there, but I have CSL in my high quality portfolio, but I'm also trading it right now. But there's quite a few companies that did not make it into either portfolio, companies I want to sell. And this is a list of companies I'm thinking of selling. Oh, where is it? Oh, it's in my other notebook. So these are the companies that really don't fit in either portfolio. So we have Adrad, Inero, Email Payments, Kogan, Prime Financial, Frontier Digital Ventures, Highcom, Megaport, Playside Studios, and yeah, I've got Sequoia here, but I've got that listed here. These are companies which I don't really want to sell right now because I think don't think they're right at the right point to sell. The share price is not an uptrend, so they don't belong in the technical portfolio, but these are not high quality companies. So they have no place in any portfolios. And if I see the share price move into an uptrend, I'll put them into the technical portfolio, but there's also a chance I might sell. Anyway, so that's what I'm doing. But anyway, the whole point of me showing you this is, so technical portfolio up 3.2%. Happy with that. So it is outperforming the market and the benchmarks. But I'm also have got rid of my small cap portfolio, but I have introduced a new portfolio, a new strategy, and I've called this spec trading. And I use 1 hourly trades. So I look at the 1 hourly chart for these, and so far it's up 5.84%. I actually said I don't think this is going to be. I have very little expectations. In fact, I have negative expectations about this strategy, but I just wanted to try it. And it's already significantly outperforming my expectations. Now, 2 week is a small sample size, and I do have 9 positions. I think I have 10 positions. I added one towards closing on Friday. And at this point in time, they're doing really well. Botanics, Encounter Resources, Race Oncology, Infinity Resources, Clear Diagnostics, Hytera, Actigen, Clearview, Keeley Resources. Now, the one thing you'll notice about all these companies, they're story stocks. That's the play here. Story stocks, 1 hourly trading. Don't fall in love with the company, just trade them. And this sort of strategy, I can now include companies like Clarity Pharmaceuticals, because Clarity Pharmaceuticals doesn't belong in my high quality portfolio, doesn't really belong in my trading portfolio. What I want to stick to in regards to my trading portfolio is companies that are real, not story stocks. That was one of my rules, no story stocks, which means, and I mentioned also I have 2 story stocks, Pointera and Alexium, and they don't really belong in either spec trade or my other portfolio. So they don't belong anywhere yet. But this is more like story stock where there might be momentum behind the company. They might release something really intriguing that excites the market, but definitely not the sort of company you want to own for the long term. And as soon as the momentum and the sentiment shifts, sell out. Don't fall in love with the companies. Now, for a company like Clarity Pharmaceuticals, which is still a story stock, has a market cap of $2 billion right now, but it's still a story stock. Let's have a look. There's a market cap of $1.91 billion. It's still a story stock. If you have a look at the 1 hourly chart, it has been in sell since it broke out. So here is the breakout. So I could have bought this at 260. I was thinking of buying this, and yeah, I should have bought it on this breakout. It was a pretty obvious breakout. And even then, there wasn't much of a signal because there was a little bit of a sell signal. It wasn't much of a sell signal, but it wasn't much. And then if you go even back further, the real first breakout was way back in, you'd say, November, December 2023 at a share price about 130. In fact, I probably wouldn't have bought here. I might have bought here on this breakout, this 1 hourly breakout. And what I'm finding is, yeah, you can use a 1 hourly time period for these type of companies. And yeah, so, and this is a sort of company I want to trade, Clarity Pharmaceuticals, and not there quite yet with this company. Anyway, that's all I have for this particular video. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.